family, hope you are well wherever you are watching me from. Your president here, your coach and your mentor. During a time like this, a lot of people always come to me and say, President, where can we possibly invest, right? And look, it's tough. It's tough, and we just have to admit, I don't like talking, negative. I don't like taking out negative words from my mouth, but sometimes I just need to face reality. A lot of traders are struggling with day trading, and they're always asking me, without doing day trading, how can I make money online? There are a lot of investment opportunities. Guys, if you are not part and parcel of our live streams, you are missing out. You are really missing out. I have recently been joined by somebody that is coming from the hedge fund space, the institutional space, and that's where she's also sharing her knowledge about how hedge funds trade their money and how you can diversify a portfolio looking at different types of assets. Let me say this, there are a lot of ways in which you can make money as a South African online, but it's not that easy. I recently had an interview with CNBC Africa, basically detailing the importance of diversifying your portfolio. So I want to say this, and I have to stress on this, guys. Try to see if maybe you have money somewhere. Try to see if you can double it. Try to see if you can multiply it. You don't really have to double it, but let it make you something, right? So that's the importance of diversifying portfolio. Let's have a listen or let's rather watch the interview, and maybe there are some few things and some tips that you can take from there and see how you can really make some money online, whether it's crypto, whether it's commodities. Look, you can have a long-term investment that can give you good returns in the long run. So please, family, again, don't forget to like, subscribe, and hit the notification bell so that you can be notified when we drop another episode from our president. Let's watch the interview. Cheers.
0.95%. And then we also have a look at, with our market watcher, gains in gold and resources counters, as well as gold has rebounded by about 0.5%. Joining me for this conversation is Givens. Givens, thank you so much. He's an analyst at Octa. Givens, maybe perhaps let's begin with a bit of a broader overview of what's happening in the global market space. What's moving and shaping the markets, either strengthening the dollar actually, or keeping the rand where it's at?
Good afternoon, Zanel, and afternoon to the viewers. I think globally the markets are showing a surprising resilience, even with the noise around the trade tensions and the central bank policy. But in the United Kingdom, what is interesting is that the FTSE 100 just crossed the 9,000 mark for the first time, and I think that's something that one can look at, largely lifted by the gains in the banking and the defense sectors. And I think the moves are because of a broader theme where we are seeing investors are leaning into sectors with predictable cash flows, right? And especially in the policy risk remaining on the table. In the United States, however, I think the markets have stayed firm, supported by strong earnings and clear inflation signals. And in our local front, the Johannesburg Stock Exchange has been relatively steady as well. It's a bit quiet. It's a quiet strength. Sectors like the healthcare and financials are performing, while the mining sector remains under some pressure for now. And I think the rand has held a narrow range between 18 rand and 17 rands against the dollar. And I think a lot of that stability is being driven by a broader market view that the rate cuts are likely in the US later this year. But I think the global market environment is still in a delicate situation. If the US and China trade friction escalate, we can be in for another surprise, especially out of Europe and the current market segments as we see them.
And I think the conversation really, Givens, is around the dollar, whether we see the rand, yes, strengthening and holding its space, but is that because of the dollar really not being as strong as it needs to, or that as it could have been? Are they paying the price for their own volatility created in that market? Is that really what is the play between the dollar and the rand?
Hi guys, this is my good friend MJ Givens Khasi. He's going to tell you about a broker, and you guys are going to like it. You're going to use the link in the description below and open accounts. Also use the promo code Givens Khasi for 100% bonus. Come, tell them. And if you guys don't, I'll be back. Tell them.
All right, as we've had it, let me tell you something about Okta. Okta is FSCA regulated, and you know what that means. That means you are protected by the FSCA regulations. Your funds are protected by a very strict audit, by the way. No hidden cost, zero hidden conditions. That's actually a smart way to trade, giving all the manipulation that is going around in today's trading world. What is also interesting about Okta is that you can secure your withdrawals under 90 minutes. That actually means that you are in control of your needs, and Okta actually respects your time. Time is money. Let's get to it. I like the fact that there are no commissions, swaps, and the spread starts from 0.6 pips. Look, you earn it, you keep it. Okta has the best trading conditions money can ever buy. Why don't you try it out today? Oh, cheers. Yeah, most definitely. I think there's nothing really much coming from emerging markets like the South African economy that might have given the rand some strength. I think as emerging markets, we are just taking advantage of the weaker dollar, and I think it's payback time. I think it's mainly, if you look at the U.S. earnings, they are showing resilience, but not really so. And I think it hopes that central banks, especially the Fed, are closer to cutting the rates. We're expecting that in the later year. And markets are also pricing in the idea that any trade disruption from tariffs may not derail growth, and at least not yet, right? But the mixed soft landing hopes and the rate cuts still holding things up, even if volumes are a bit light.
And on the back of those messages, especially the US trade messages, are emerging markets still seen as a safe haven? South Africa, we're benefiting from that, especially when we look at gold continuing to rise. We did see a 0.5% increase, reversing what happened on Monday. So if they are looking at South Africa as a bit of a safe haven on these on gold, what else? Are we looking at bullion? Are we looking at bonds as a safe haven?
Yeah, most definitely. And I think one thing that I always say is analyze that crypto at this point is also overlooked. And I think that's what we also need to look at. I always call it the digital gold, that if we are then looking to hedge against currency or economic instability, one always looks at the gold as a safe haven asset, but I think we can also look at crypto portfolios. I mean, at this point, many people are investing in crypto as a safe haven asset. And I think that's where I'm betting my money on.
Sure, it's definitely a conversation to unpack as well, to see how crypto is managing or has managed during this time. But oil is also one of interest. Looking at it's declined again for a second day. Brent fell down to $69 per barrel. Your thoughts on oil and that space for investors?
But look, I think for me, it's just a bit of a retracement. There's not really much noise coming from it. I think oil is being consolidating within certain levels for some time. And I think if you look at the performance in the previous weeks, we had a bit of a dump coming from oil. But I think it's just on a recovery mode, consolidating and trying to picking up orders. It's only a matter of time. Maybe we might see a bit of a appreciation to the upside. So at this point, I'm just seeing only consolidation levels.
And for me, you talked a little bit about crypto, something that we keep on the side of our eye. We need to bring it center stage, but something that's always been center stage when it comes to markets is technology. Now, where are we at in terms of the US-China relations? We saw the Nvidia stocks, Apple, and all of those, starting to rear their heads again with the redirected tariffs. Do you think technology is still a place where a lot of investors have gone into, and should we be looking there? Are you looking there?
Yeah, most definitely. I mean, if we are going to have the whole issue about U.S. inflation expectations, I think it's only fair that we are seeing that the markets are now pricing in a very possible rate cut around September. That's what we are expecting. Although we see that some officials are being a bit cautious, especially with the tariffs now back on the table. And I think that's what we need to look at. Technology is emerging so much and is evolving, right? And I think one needs to do is research to see how they can capitalize of shares and companies that are doing well as far as technology is concerned. I mean, from a South African perspective, if you look at lower US interest rates, they're generally positive for risk assets, right? And I think it eases pressure on the rand and it helps attract capital to local bonds, equities. But I think this hinges heavily on how the inflation path evolves in the next 2 months and whether we can see external shocks compliance outlook, or can we just be on the side and look at what we can really fit out of these markets?
And what signals are we getting when China starts to buy more NVIDIA chip sales? They're going to do that. Oracle is investing more in AI. Hong Kong is also looking at the AI market and looking at technology. Are these signs that if the market is stabilizing or turning around, are they leading the way for tech reinvestment?
Most definitely. I think it's a race. I think right now what is happening is that it's a race of who has a better technology. I mean, we have seen with the artificial intelligence from China, which is called DeepSeek. I think they were sending a clear message that this is a race for technology. The one who has better resources is the one that is going to control these markets. So I think the narrative is out there that, look, it's a market research driven approach that these companies are taking. And we as investors, we are looking at who has better resources to take us into the next level of technology. And but obviously it comes with its own downsides. But as I've mentioned, I would look at tech stocks as well as a crypto portfolio now if I were to look into investing and try to capitalize out of this.
Thank you so much, Givens. I think we covered one major ground today for investors. Thank you for your time, Givens Khasi, analyst at Octa.